Welcome back. This is the Swotlight segment, and I thought we'll focus on the paper sector this time and understand the value chain and put Swotlight on JK Paper. But first, to the basics. How is paper made? Via pulp. And how is pulp made? Via cotton fiber, wood fiber, etc. So if we look at the value chain, wood, logs, chips, they are processed at pulp mills, which can be mechanical pulp mills or chemical pulp mills, which is then sold to paperboard mill, and then you get various kinds of paper there. So when it comes to JK Paper, it is an integrated paper manufacturer and has products like office and copier paper with 28% market share, there's coated paper with 10% market share, there's writing and printing paper as well. You have packaging board with 19% market share, some of the products. In terms of capacity, the total saleable capacity is 7,61,000 tons per annum. And since I said they are integrated, they also have pulp capacity of 4,75,000 tons per annum. In the saleable capacity, highest is from uncoated paper, which is followed by packaging board and then coated paper. Now to the financial performance. Company's revenues in last few years have been volatile, FY20 and FY21 understandably so because of the pandemic. But Q1 has been stellar. Even in terms of margins, they broke out in Q1 with 30% margins coming in this quarter itself, and profits almost doubling in FY22 due to lower finance costs and lower taxes as well. Now, important to note here, industry margins are at 20 to 24%, but integration for JK Paper has helped company with higher margins, sustenance of which needs to be seen. Company exports 8 to 10% of total volumes, but prices in both the markets are largely similar. But company's focus largely is domestic markets. Capacity utilization for the company in FY22 stood at 104.1%, and company has been on a big capacity expansion spree. The company has grown over 5 times in last 17 years. In 2005, they entered coated paper. In 2007, they entered the packaging board segment. In 2013, they expanded to uncoated paper capacity. And in 2018, they had acquired Sirpur paper plant. And that's why that big jump in capacity in 2020. Then they saw expansion in packaging board capacity, taking it to 7,61,000 tons per annum. With this also came need for more debt. But then now, most capex has been done and company has been able to reduce debt from higher levels. Now it is around 1,000 crore rupees. What are the triggers going forward? The company in its own admission says the packaging board demand is very strong, and except for coated paper, imports for other categories are very small. So demand should remain intact, and that they are booked in terms of volumes for the entire year. On balance sheet, they expect to reduce debt by 300 to 325 crore rupees every year. The company does not expect price correction and no major rise in input costs, and since no additional capacity is coming in the industry as well in the near term, prices according to the company should remain firm. However, it is a cyclical sector when it comes to product pricing. But this company is integrated, so they are insulated to some level. The industry as a whole does not have formal contracted volumes, so that is a bit of a risk, and 50 to 60% of quoted volumes are imported, so that could be an issue as well. Promoters, they hold 49.63% stake, with L&T Mutual Fund holding 3.45% stake in the company. The stock, even after this sharp run-up, is very cheap at 10 times FY23 forward earnings. So that is all about JK Paper and the paper industry, but we have run out of time on this episode of Inside Out. It's a goodbye from Nigel and I. But do write to us and tell us the companies you want us to discuss and you want to hear about, and we'll feature these on our show. Thanks a lot for watching.